everyone. Thanks for joining us for another edition of Texas Insider TV, brought to you by the Texas Economic Development Corporation. I'm Jim Cardle. With the final quarter of the 2016 calendar year upon us, not to mention the 2016 election, folks are starting to look forward to the 2017 legislative session and what the state of the Texas economy is going to mean for the Texas state budget. Marc Flaster's a 30-plus year Texas banking analyst and consultant, a frequent guest on our Texas Insider TV show, and we're pleased to be able to visit today with Marc Flaster to give an economic outlook for what's going to impact the election and the Texas legislative session in 2017. Well, Marc, thanks for joining us today. Glad to have you.
Well, it's a pleasure to be invited, and I appreciate the time, especially to be here in the lovely weather of Texas. Although today the sun is a little bit behind the clouds, but it'll come out either today or tomorrow as the song goes.
There you go. You've been down in San Antonio at the Independent Bankers Association of Texas meeting, impacted by the rains and the floods down there, but you're on a tight schedule here, about to get back to New York City. Let's jump right into it if I can.
Absolutely.
What are you seeing here, first of all, before we get into some of the national economy or more national perspective? What is the outlook for Texas as we're getting ready for a legislative session in January 2017? What's the Texas economy these days doing?
I think the first thing that I should say before we go any further is that these are my own comments and observations. They don't represent my company that I represent, or other people's views or mine.
Okay.
And I think the first thing I want to share with you is that in prior conversations, I have talked significantly, specifically about how energy and the change of energy prices has affected the Texas economy. And I have to take a step back from that and say it hasn't been as severe as I had thought or anticipated.
Really?
And in fact, the state has generally, we'll say, survived. And even a place like Houston has had net in-migration. Housing prices have stabilized. They came off the peak a little bit, but things are still going on. There was actually job gains in Houston, which was surprising, but very small.
Okay.
And the biggest thing that everyone's pretty much aware of who's involved in understanding the state economy is that the E&P guys, the guys who are in exploration and development, that side has suffered dramatically. And the refining side, which actually in Houston is actually split east and west, and the west side is E&P and the east side is refining, and the refinery guys all profited from the improvement of fall and improvement being the decline in the price of oil.
Because there's more supply.
Well, there was lower pricing, and therefore it was more efficient or cheaper for them to produce, and the demand hasn't fallen, and so in the product need. And so for them, business was good, and for the other guys, business wasn't so good. And the state is that part of the state is working through it. The re-emphasize has gone back to the Permian Basin because it's so inexpensive to bring up the product, and the cost of material and people has all dropped significantly. People are not, businesses or service areas were, we'll say, overcharging. There was so much demand. The guy said, "You want me to show up? Pay me." Now it's, "Can I have the order?" I said, "Please, give me whatever it is. I'll send my men out there. You pay me what you think is right." So that's all improved, and the production has stayed up. So whether it be, we were going to talk about this later, but let me step into it right now, and that has to do with just supply of oil in the world has continued to grow. All this talk right now, there's a meeting with the OPEC group, and the reason oil prices have bounced back from $30 to $45 is all speculative, that there would be some agreement on the part of the largest producers that they would either cap production or allocate production, and there's absolutely no desire to do that at all. The problem in this world continues to be that in order to feed people today, you need bucks. In order to get bucks, you have to provide or find something somebody will buy, whether it be raw materials or food
And you're talking
Right.
about the countries over in the Middle East,
Would be-
perhaps, or maybe even
or
South America
South
and
America.
Russia even.
And so they continue to bring it out of the ground. They sell it at any price they can get for it. And so the amount of supply continues to grow, and the storage facilities are all completely beyond the capacity.
So this is very interesting, not only interesting but important for our Texas economy, because there's been a lot of focus on how much the tax revenues to the state may or may not have fallen or staying even, I think is what our comptroller Glenn Hager is saying. But you're indicating that Texas has weathered the economic funk of the last year fairly well, in fact.
I think so, and a lot of it has to do with in-migration. The Today, we were this convention is out at the La Cantera Resort
Outside of San Antonio.
outside of San Antonio itself, and there's a big quarry right in front of that, which has a Six Flags of Texas amusement park. And I understand when they were considering in building that park, that the thought was that they would fill in the quarry and make it into a reservoir, because San Antonio is short of water and in need of water, and they decided not to do that. Well, I think if it happened today, that it would have been a reservoir. The outlook for San Antonio, I'm told, is 1 million more people within the next 10 years.
Really?
And and they're all going to have toilets that flush. So
Yes.
I have an answer for water, but
So how about just the Texas jobs market, whether it's that million you're indicating in the San Antonio area? I would think in terms of Christmas sales maybe being around the corner or a big retail season toward the end of the year, is the outlook fairly optimistic?
well, it's you have two different places. Longer term, or even at the current time, Texas is still attracting people.
Okay.
The rest of the economy, whether it be the Rust Belt or what's going on in some other areas, people continue to be attracted here. Economy, tax policy, weather, land. I mean, the cost of living here is significantly lower. Home values are within the reach of many of Americans, middle class, whatever you want to call it. People think I have no where that starts or ends, but definitely you can live here. I don't be a great advertisement for Texas, but definitely it's attracting people, as is a lot of the southern, non-northern and the Midwestern areas. Now, we wanted to touch a little bit on the economy, and one of the things that's happening here is that so much of our nation is become conveniently, let's say, or is found the convenience in the electronic aids, PDAs and like.
Okay.
And so more and more shopping is going into competitive pricing using the electronic aids. Now,
You're talking there about the box, the retail strip mall compared to online shopping.
well, the first thing is that people used to take their PDA in and look at the price of something, and then compare where they might be able to get it somewhere else, and then argue that your price is too high, and or if they want to argue, they'd go shop at that other store and buy
Yes.
it. Now they go directly to Amazon and or Jet or wherever it's going to be, and they buy it there, and they sideswipe, but they don't even go to the store, the big box, and it's
That
not so
impacts
much
jobs and
so Macy's and Target, just to name two, have closed down significant numbers of their stores because sales product in-store sales are way down, and they're not moving their products. So they say, well, we have too many stores and we're not getting the kind of volume we need. The other thing that's happening, of course, is it's reducing the profit margin of the people who do have the bricks and mortar, and so they've got rent and salaries to pay and utilities alike, and yet they can't charge the value they need, the premium we call it, in their product to get the profit they need to continue to operate the stores or have the locations or expand the locations. And so the profit, the recipient of all that is these online resources, and there's more and more of them coming. Even the high fashion has outlets that are on the internet and provide access. And some of them to the point that you can rent the clothes that you want for the particular occasion, and then send it back to them, and and you don't have to buy it. So thousands of dollars dresses that you might want for some very special occasion, you don't have to buy it.
Okay, speaking of things that are down, fascinating comments there about the transition to the online economy. Folks, I want to again thank you for joining us. We're visiting with Marc Flaster, a Texas banking industry analyst for over 30 years, and brought to you today by the Texas Economic Development Corporation. We were talking, Mark, before sitting down here about low interest rates and how that is impacting purchasing power, seniors' pensions, and so forth. Talk a little bit about the record low interest rates, or if not record, close to record interest rates.
Well, this is a big problem, and I don't have any charts to lay out here in front of you, but basically the Fed has orchestrated our interest rate levels at the current time, and the procedure in the past has always been that when the economy is weak or there's demonstration that there's struggling in the economic front, that if we lowered interest rates, that would encourage people to find money was cheaper, and there's more opportunity to use it, or they see opportunity to use cheaper money, and that would reignite the progress of the economy.
The typical old economic cycle is
Right.
being redone.
And this has been their keepsake for all the way back to the days of William or of Keynes and Hayek and all these guys. That was the theme that they progressed. And
You're speaking
and
to our economist
right.
listeners.
Well, the point. Okay, but the point is that when 9/11 occurred, that was not an economic event. Okay. That was a psychological event. Yet the Greenspan treated it the same way as he would have, as all their leaders of the Fed have in the past, is they collapsed interest rates, and the economy did come back. And it wasn't interest rates that caused it come back. What caused it come back is that the economy, the country recognized that something terrible had happened, and that it wasn't about to happen again. And I could say our administration did some effort to buy-side that. We won't go into all the things that happened after that, but the important thing is the economy prospered, and rather quickly. And so then the Fed then concerned, always the Fed is that we got to be concerned about inflation, so they said if there's more economic activity, we got to be cause of some price pressure, and this price pressure, we need to be concerned about that, so they started raising interest rates. They went all the way back to 5%.
But in this
zero.
In this election season, this is interesting because you're talking about the psychological impact of events on consumer behavior.
Well, then
interest
that
rates.
was one event, and then
Yes.
the next event was we got over the housing market got over energized by the pressure to by the administration and the Congress to make everyone a homeowner, and the free source of resourcing of money, or let's say the low the credit valuation of potential borrowers was completely dismissed, and people just
Led to the housing bubble of 5 years ago and the bust. Yes,
were given money and said, go ahead and take the money. The housing prices rose quickly, and when it came to a head, the prices just the whole thing came to an end, and it ended very abruptly. And so the reaction, of course, was the same: drop interest rates, and that would reignite everything, and we'd get started at a lower level and work our way back up. And what happened is that the interest rates then did collapse, and this time all the way to zero, and the economy didn't respond. And so now the challenge, as is faced with the Fed, is that we've been 8 years into this, and they haven't found a way to get us out of it.
And a lot of folks won't realize, I know you have talked about it in previous shows, that interest rates in Europe are now in some instances at a negative level. Is that a possibility for here in the United States?
Absolutely. At the recent Jackson Hole conference, minus negative interest rates were discussed, and they're still left on the table. But the important thing I want to interrupt here is say it's not interest rates that are a problem right now. Our problem is Dodd-Frank and Basel III,
Really?
which was put together at this time when we had this collapse, and worldwide had a collapse of real estate.
And here what you're talking about is bank regulations and bank.
Well, all regulations in financial sectors
Yes.
that when put severe constraints on the ability of lenders to step
lend.
back and lend, and without lending, you can't, that's the grease that's gonna make it work, and without money being available, and being available to move where it, individually, it thought it was gonna go. So what our government cannot deal with is unintended consequences. So they went and shut down credit, thinking that they were helping the consumer get back into the credit game, because they thought they had been disserviced by the fact that they had access to money they should never have been able to have. They bought properties that they couldn't service or maintain, and that was somebody else. The devil made them do it. They didn't have anything. The taxpayer, the voter, he was taken advantage of. So we're going to protect him by Congress putting laws in place to make it more difficult to bring these people to a point that they could be, they wouldn't be. We're going to protect them against themselves, so to speak. And the unintended consequences was they shut credit down for everybody.
So unless you're in the middle of a dynamic economy, which Texas is here with the oil and gas boom, that's been a great impact on the rest of the nation when we hear about Ohio or Pennsylvania or some of these other states having a struggle economically.
I would say, as we sit here, just a thought that came into my mind is that the boom, the discovery of oil in Texas, okay, came about during the worst depression this country's ever experienced. And the Texas economy.
Not the most recent one you're talking
No,
about.
well,
back in
that
the
wasn't a
30s.
depression.
Yes.
That was a bunch of political horseshit.
Yes.
Oh, pardon me. Bull
That's
crap,
okay.
yeah,
That's
right.
okay. We know what you're talking
But
about.
the recession that we all have heard about, that our parents lived through, and the
Recent recession, not depression. Yeah.
That during that depression, the oil was found here in Texas, and the state of Texas prospered, and a big piece of the state, and a lot of wealth was created during that period of time, while the rest of the country was struggling. Brother, can you spare a dime? Okay? And we are in the same position on a very different, limited scale here, looking at the state of Texas today.
Well, speaking of the state of things, we've been going close to overtime here. I know you got a plane to catch, so we're going to wrap it up and leave it there. Marc Flaster, appreciate you coming in.
Thank you very much. We have a lot of other things to discuss. We'll leave it for the next trip.
We
Okay?
appreciate you always stopping by when you're in the state of Texas. Marc Flaster, Wall Street expert and banking analyst for the Texas banking industry. Again, folks, we appreciate you tuning in to join us for this discussion about economics and the Texas economy, brought to you by Carlton Schwab and the folks at the Texas Economic Development Corporation. Remember, you're either an insider or you're not. I'm Jim Cardle. Thanks for joining us.